Hello students, you are here because you are viewing the answers for the financial statements quiz that you did today. Maybe you need extra help and here it is. What I will do is I will go through the additional information with you. Then I will pass the adjustments and show you how to classify the different items here. Let's read the financial statements and see what are some key information we need to know. Firstly, we know that this is extracted from the business of Jordan Wong. It's important to know the name of the business because that is required in the financial statements. Secondly, we know the year end is 30th of June. We also see that the trial balance is given in the form of debits and credits. Some important information to note is that cash at bank is on the credit column. Rental has both a debit and a credit. Now, what does that tell us? When cash at bank is on the credit column, we know that this is a credit bank overdraft. Credit cash at bank is a credit bank overdraft. So I think I'm just going to write this here so that I don't forget it later on when I am doing my financial statements classification. Secondly, I also see that my rental has got a debit column and a credit column. Now, debit columns of rental are expenses. So I'm going to go ahead and write this beside so that I remember later as I classify it. And credit column are income because income has a normal credit balance. I will do this so that I don't forget it later. Okay, so this is the first glance through of my trial balance. After that, I look at the additional information and I have to remember that for each additional information, two accounts must be adjusted. Two accounts must be adjusted for each item. Now that means if you are just adjusting plus one account and then that's it, you are moving on to the next additional information, that's not right. You have to go back and you have to find two different accounts to adjust. So let's read the financial additional information and see how we should adjust for them. The first one reads, a cash payment of $2,000 for utilities expense has been omitted. What does the word omitted mean? The word omitted means left out. And since it has been left out, we will have to adjust it now. So firstly, it's a cash payment. So if it's a cash payment, I will go on and look for my cash in hand. 4230, and there has been a payment. So I will need to minus 2,000. That's the first account that has been adjusted. The second account that has been adjusted, what was it paid for? It was paid for utilities expense. So I'm going to look for my utilities. Here you go, utilities. This one must be an expense. All right, and I am going to increase the expense. So I've done the first one. I'm going to go on to the second one now. 1/5 of the bank loan is due for repayment on 31st of December 2022. Keeping in mind that the year end is now 30th of June 2022, from 30th of June to December 31st of December is about 6 months. And 1/5 has to be paid in 6 months. So 1/5 is actually current liability and 4/5 is going to be non-current liability. And then we will have to do the split. So here is our bank loan. Our bank loan is 100,000. There's going to be a split. Okay, I'm going to show the split here. All right. And I'm going to split 1/5. 100,000 times 1/5 is 20,000. Now this 20,000 has got a special name. All right. Now this 20,000 special name is called current, it's a long name, portion of long-term borrowing. And current portion of long-term borrowing is a current liability, it's a CL. Okay, so that's the first thing that I need to do. $20,000 is a CL. What about the remaining 4/5? The remaining 4/5 is called long-term borrowing, and it is a NCL. And how do I calculate it? 10,000 times 4/5, which will give me 80,000. So I have to remember that to split these two accounts up, this account up. So I've done the second one. And I'm now going to do the third one. And the third one tells me inventory's net realizable value is 100,000. Now there is a problem here, because if I look at my inventory over here is $103,030. $103,030. But this is not going to be 103,030 because you see the cost is 103,030. But the question tells you your net realizable value is only 100,000, which means you can only sell it for 100,000. Now, if you can only sell the asset for 100,000, what happens is that you immediately have made a loss. And the loss is $3,030. Your inventory is no longer worth $103,030. It's only worth 100,000. So what do? The two accounts that you must adjust is you go to inventory and you are going to minus. You are going to minus $3,030, minus away the loss. Then you know that you have experienced a loss. So you are going to open a new account because the name of the loss doesn't appear here. You're going to open a new account, and this new account is going to be called impairment loss on inventory. And this is an increase in your expense of $3,030. Next, so we are done with the inventory. And then we go on and do depreciation. Now first, we are going to do depreciation of fixtures and fittings is 10% per annum based on the straight line method. So I'm just going to do my calculation at the bottom. Fixtures and fittings, which is straight line method. Straight line method's depreciation is quite straightforward. Cost minus scrap value times percentage. And in this case, what is the cost of the fixture and fittings? 50,000. So I will take 50,000 minus 0 times 10%. That will give me 5,000. Right? The next step is to consider what are the two accounts to be adjusted. Whenever you have depreciation, the two accounts that you are going to record in is depreciation expense increase and accumulated depreciation increase. So we are going to make these two adjustments. Firstly, depreciation expense of 5,000. I looked through the trial balance, but I don't see any depreciation expense. So I need to open a new account called depreciation expense of fixtures and fittings. Of course, it's going to be quite messy if you write out the full name. You can just write a short form since it is your own working. So sometimes short form, I will just write DEP as EXP, that's depreciation expense of fixtures and fittings. I'll just write a short form. And I need to know this one is an increase in expense of $5,000. I will always make the adjustments at the side. So you also make the adjustment at the side. So that's one account, depreciation expense. The other account is $5,000. Accumulated depreciation also must increase. So I'm going to go to my fixture and fittings, accumulated depreciation, and plus another 5,000. Next, I'm going to look at my motor vehicles. Motor vehicles is 20% per annum and it's based on the reducing balance method. So I'm going to record that now, motor vehicles. Motor vehicles is the reducing balance method. I'm going to write down the formula first in case I forget it. Cost minus accumulated depreciation times percentage. And in this case, I'm going to find the cost. Where is the cost? Here is the cost. The cost is 150,000. So I will write 150,000 minus, what about accumulated depreciation? 22,000. I'm going to times 20%. And that will give me 25600. So again, what are the two accounts that has to be adjusted? Depreciation expense and accumulated depreciation. So I'm going to go up and see there is no depreciation expense of motor vehicle. I will open a new account called depreciation expense of short form because this is my own workings. Motor vehicle is an increase in the expense and the increase is 25600. Next, I need to remember accumulated depreciation must increase. So I go to accumulated depreciation of motor vehicles, 25,600, increase it. So the first step is done, additional information. The next step that you will need to do is to classify. Classify all the accounts that you see. Change color. I'm going to classify all the accounts that you see. Classify into what? You'll classify into your trading account, which are in your trading account, which is your income, which is your expense, which is your NCA, your CA, your NCL, CL, and your OE. You will classify all of the items into these categories. You will write at the side. You can write beside the number, but you can also write at the side of the words. To make it easier for everybody to see, I will write it beside the words. Okay, so I go one by one and I classify. First one, capital is a OE, so I'm going to classify it as OE. I'll just write OE. Drawings is a OE. Fixtures and fitting is under NCA. Motor vehicles is also under NCA. The entire accumulated depreciation is also NCA. Now it's a bit different. There are three things that belong in the trading account. What are these three things? Sales revenue, sales returns, and cost of sales. These three items always appear in the trading account. They are in the front part of your statement of financial performance. So sales revenue is part of your TA. Sales return is TA. Cost of sales is TA. Next one, utilities is an expense. Cash in hand is an asset and is a CA, current asset, because you can use it, you will probably use it up within one financial year. Now, cash at bank usually is a CA, but in this case, it's a credit balance, it's a bank overdraft, so it becomes a current liability now. For rental, we had a discussion about it just now. The number in the debit column is your expense. And the number in your credit column is an income. Wages and salaries are always expenses. Bank loans, that's where you need to take a note. Bank loans have been split into a current liability called current portion of long-term borrowing, as well as a long-term borrowing, which is a non-current liability. So that one we have to take note. What about trade payables? Trade payables are current liabilities. Trade receivables are current assets. And finally, inventories are current assets. Now that we have done all the adjustment and we have classified everything, it's time for us to prepare our financial statements. So what you will see here is that I have prepared the statement of financial performance. It is 2 columns. All right, it is 2 columns. And in these 2 columns, I will be putting in all my numbers. Okay, so what goes in the statement of financial performance? The first thing that goes inside here is your trading account. The 3 items that's inside your trading account. Here. So let's put these 3 items in. There is a particular format. So the first item that goes in is your sales revenue. Because this is a video, please feel free to pause every time you need to write something. Sales revenue, the amount is 2,723,500. So I will key that in. Next, after sales revenue, I will be recording my sales returns. So the sales return number is quite big, 95,200. So I will have less sales returns, 95,200. After that, you should take a ruler and draw a line. We'll use black. Take a ruler and draw a line. And sales revenue less sales return is net sales revenue. I'll take my calculator and do a calculation. And I will get 628,300. After that, the next item in the trading account is cost of sales. So I will have less cost of sales. 454,600, and it's less. So there is a bracket minus. After that, my ruler appears again, and I will draw a line. The line means equal. Net sales revenue less cost of sales is gross profit. Gross profit, I will have to take the 2 numbers to deduct each other. 173,700. After this, I have my add rental income, or rather add other income. Let me take a look. What is my other income? All right, my other income is only my rental income over here, 38,400. So I am going to add other income, rental income. And there's only one number, so I can write it in the final column, 38,400. Now the format after that is less expense. Now after here, I am going to list down all my expenses. So let's see what expenses we have. Running through the list, I have salaries and wages expense over here. I cannot forget that. Okay, I'm going to remember salaries and wages expense. I think I have a utility somewhere. Yes, utilities expense over here. Okay, so I'm not going to forget that. I have utilities expense, I have salaries and wages expense. So I'm going to write that down. Utilities expense. Now, there is a working for utilities expense, right? 27390 plus 2000. So I need to show the working. 27390 plus 2000. And since there are more than one expense, I'm going to put it in the first column, 29,390. The next expense I have is salaries expense. So I'm going to write that in. And for that, salaries and wages, 78 980 in brackets. Any more expenses? Actually, there is, don't forget. So I'm going to tick off the numbers. Why do I tick off the numbers? I tick off the numbers so that I know I have already used it and then I will not miss it out. And I also have a rental expense, right? So I will list that down as well. Rental expense. 13,800. I tick the numbers so that I do not forget them. I don't miss it out. Next, at the side, there are also some expenses, and I'm going to record these expenses now. Impairment loss on inventory. I'm going to transfer it over. And I will always have depreciation. So I have depreciation of fixtures and fittings, depreciation expense, excuse me. And after I write down my depreciation expense of fixtures and fittings, I must write down the working. 5,000 minus 0 times 10%. I must always write the working. No working, you lose marks. The next depreciation is for motor vehicles. All right. And what is the working? The working is right below at the bottom. All right. I did have the working over here. Have to show working. All right. And the value, I am going to write 25,600 in my column, my first column. And with that, I am done for my expenses. So I'm going to write total expenses. Again, I'm going to take a ruler and draw a line underneath this entire column because the line means equal. So all these numbers added up together equals 155,800. Remember to put that in bracket. All right. Finally, I'm done, nearly done. I have profit for the year. Now, profit for the year, I must remember, I will take gross profit plus income minus away expense. So where is my gross profit? Here is my gross profit. Where is my other income? Here is my other income. And where are my expenses? Here are my expenses. So I'm going to take a calculator and calculate that. And I will get 56,300. Make sure to write in the correct line, the same line as profit. You see it's the same line as profit. All right. And I'm done, except that I'm going to draw a final column because I took gross profit plus expense, gross profit plus income minus away expense. There's going to be an equal sign here, right? So equals 56,300. And 56,300 is really the final answer. So under the final answer, there's going to be a double line like this. Double line tells me that this is the final answer. There are no more answers after this. So this is how your statement of financial performance will look like. After you finish your statement of financial performance, it's time to do your statement of financial position. Your statement of financial position has got 3 columns. Don't forget about that. So let's key in the 3 columns now, the names of the 3 columns. The first column is called cost with a dollar sign. The second column is accumulated depreciation, but only for this you can write short form because the words are really very long. And the final column is called net book value. Net book value is cost minus away accumulation depreciation. Right? Net book value is cost minus accumulated depreciation. And then now we are ready to start our financial position. The first item inside our financial position are our assets. Under assets, the first thing that appears is non-current assets. Now we know that there are 2 non-current assets, fixtures and fittings, as well as motor vehicles. And so we are going to fill in the blanks here. What is the cost, the accumulated depreciation, and then calculate the net book value. So the cost of fixtures and fittings, let's have a look. Where is it? Here we go. Fixtures and fittings, the cost is 50,000. So we have 50,000. What about the accumulated depreciation? The accumulated depreciation is 5,000 plus 5,000. I need to show that in my working. 5,000 plus 5,000. Which will give me a negative of 10,000 because accumulated depreciation is a minus. So I put it in brackets to remind myself is to minus it. How to calculate the net book value? 50,000 minus 10,000 is 40,000. I do the same for motor vehicles. So can you do the same for motor vehicles right now? So pause my video and do the same for motor vehicles. Because I will just show the answer. Are you ready? So motor vehicles was 150,000. The accumulated depreciation was 22,000 plus 25,600. Remember to show the working. 22,000 plus 25,600. Which will give you 4,7,600. And after I deduct that away, I will get 1,0,2,400. Next, after this finishes, I have to calculate my total non-current assets. So I take out my ruler and I'm going to sum up these 2 numbers together. And that will give me 142,400. So I'm done with my non-current asset. I'm moving on to my current assets. Now, current assets are more straightforward. I think you have done that many times. So you're going to go over here and you see we have used up. We have used this 50,000 and this one all used already, so I tick. So I'm now going to remember to put in all my current assets. All right. So I'm going to give you some time. You pause the video right now and list down all the current assets because I won't show all your, I won't be doing this item by item. I'll just show the answer. So list out all the current assets. Where are they? Over here, over here, over here. Remembering that your inventory has got some workings that you need to show. All right, here are my current assets. I have 3 current assets, and I need to remember that cash in hand, there was a working. All right, so take 4209, show the working, and then the number, the final answer, the answer I will show in the second column. The same for inventory, there was a working. All right, and the answer I will show in the second column. So now what do I have? I have total current assets. I will sum up the value. I will take a ruler, draw a line, because I'm going to sum up these 3 values. And when I sum up something, what plus what plus what, then equal, right? That is what my line is for. And I will write the answer in the final column. After I sum up the 3 number, my total current asset is 445,590. Now I'm going to add all my assets, my total assets, right? So my total assets will be equals to my NCA plus my CA, and it would be these 2 numbers, 142,400 plus 455,590, and I will draw a line underneath this plus this, and the final answer for non-current asset, for total asset is 597,990. And because it's the final answer, I will be drawing a double line underneath that. Here is my asset column. Now, when I'm done with my asset column, I'm going to put in my equities and liabilities. So I'm going to continue on with my equities and liabilities. After that, I'm going to type in equities and liabilities. Under equity, it is owner's equity. And there is one line item, capital. Now, capital, there is a formula to calculate capital. How do you calculate capital? We take our beginning capital plus profit minus away drawings. And I'm going to put in the beginning profit, the beginning capital, profit, and drawing now. What is the beginning capital? Go to my work here, and I see that my capital is 305,000. That is my beginning capital. So I will have 305,000. Then I have my profit. Where did I get my profit from? Right above here, from my statement of financial performance. Here is my profit for the year. I'm going to take that and put it under here. And finally, I am going to add in, or rather minus away my drawings. So I minus drawings. And what is my drawings? I go back to my trial balance and I find my drawings here, 5,000. So I've used this number and this number, 5,000. All right. So what is my final answer? I think my final answer will be 350,300. Sorry, it should be 356,300. Okay, so that is done. I am done with my equity. Now, after I'm done with my equity, I go on to my non-current liabilities. There is always only one non-current liability, and that is long-term borrowing. And can you remember, for the long-term borrowing, it's actually 100,000 times the 4/5. So because there's only one number, I can put the final answer inside the final column. There are few. Next, what is the next item? It is your current liabilities. Now, there are a few current liabilities. So go ahead and fill in the current liabilities. So if I take a look at my work here, where are my current liabilities? Here you go. I remember that my cash at bank, there was a current liability, a bank overdraft of 12,600. So I'm going to put that in, except I need to call it bank overdraft. I cannot call it cash at bank. I must say bank overdraft, 12,600, because there are a few, I will put in the second column. Our other current liabilities, usually there's a trade payables current liability, and there we have a trade payable. I'm going to tick those that I have used so that I remember. The trade payables is 129,090. There is one more current liability over here, my current portion of long-term borrowing, 20,000. And I have used that. Let me go back and check whether there are any other current liabilities. No more. So I'm going to add all of this up together. Total current liabilities. All right, my total current liabilities is 161,690. And because I added these three numbers together, I'm going to take a ruler and draw a line to signify that I've added up these three numbers. All right, and I am nearly done. So what I'm going to do now is I'm going to add up my equity and my liabilities. So I type total equity and liabilities. And I'm going to add up the three numbers. Which three numbers should I add up? I should be adding up, the three numbers that I should add up will be my equity and my NCL and my CL. These three numbers needed to be added up together. So where are the three numbers? Here's the first number, equity, NCL, and CL. Okay, when I add up the number, I discover that it's actually the same number. Okay, wait. So after I add up the number, I'm going to draw a triple line again to show people that the three numbers added together equals 957,900, and 597,900 is the final answer. And to show that, I will draw a triple line like this. Now, after that, I will do a check. The total asset, which is in green now, must be the same as the total equity and liabilities. And if it is, your financial statements are balanced. Congratulations.